Hey everyone, welcome to the KE Report, a daily editorial, April 22nd, and volatility reigns supreme in these markets. Yesterday, the Dow was down over 1,000 points. Today, the Dow's up over 1,000 points. Sorry, it gets confusing to ride this roller coaster. We are chatting with Dave Erfle, founder and editor of the Junior Miner Junky. And as much as I said the Dow there, we're going to be talking about the precious metals because gold was up at about 3,500 and then it has given up about $100. Right now, around 3,400. Still, again, a very strong price for the precious metals. Yesterday was an interesting day where gold was up and we saw the gold stocks, in a way, kind of follow the bleed that we saw in the markets and sell off throughout the day. A lot of the gold stocks opened up for the day and then just kept drifting towards parity, some even negative for the day yesterday. And today, bit of a downtrend here as investors seem to be rushing back into the markets. But again, this is a volatile market, and there still is, I think, a downward bias to the market broadly. Dave, let's talk about this volatility for the precious metals and the markets and what you're taking away from it. What do you think of this correction? What do you think of 3,500 gold? What matters for precious metals investors right now?
Yeah, Corey. Well, this correction was expected, because the gold price started to go parabolic. When you have that angle of ascent that goes up that has three separate higher trajectories, and it starts to go parabolic, then you're about to get a correction. And the latest catalyst last week was Trump's open fight with Fed Chair Jerome Powell, right? I mean, coming out and calling him a loser and telling him that he needs to lower interest rates right now. The world demands it, yada, yada, yada. And then you had Austin Goolsbee, the Chicago Federal Reserve president, come out on Face the Nation on Sunday and basically, try to calm the market down by saying, the Fed needs to remain independent. And he also said, basically, he also reiterated what Powell was saying about stagflation coming into the economy. He said the inflation rate is higher, growth is slower, and the job market is worse. And those are the three ingredients for stagflation right there. So the gold price had this, it looks like to me like this interim peak. I mentioned to my subscribers in my weekly update last Friday that gold was due for a correction, and the gold price might run to 3,500 or so before it does. I didn't think it would happen so soon, but it looks like it did. It hit 30. April gold hit 3,509 overnight, and now it's reversed $100. But you could tell by the action of the miners yesterday on Monday, you had the gold price, up another $100 coming into the week, and the miners they surged in the morning, and those gains were all gone in like a couple hours. So you had the miners saying, "Hey, the gold price is about to correct," because the miners always lead in both directions, right? I mean, they lead on the downside and they lead on the upside. So the miners were due for a rest, and they basically told us that, "Hey, we're having a correction here." But the volatility I expect to continue here. I mean, even though we've had this reversal, the top of the latest channel is about 3580. So we could have one more blast up there. Who knows? But it's really interesting the way this is playing out, because gold is basically the only safe haven now. I mean, this island of safety in this sea of volatility, because you see the dollar going down below 100 on the USDX, US Treasury yields spiking. So that's saying that, hey, gold's the only safe haven here. And that's basically a big reason why we're seeing this huge move.
Yeah, Dave, it's been a very interesting environment because normally you would see the other safe havens like the dollar or bonds kick in or even the yen, and instead you've just seen gold, as you say, as an island of safety. Now, at these current prices, if we zero in on the gold stocks, I agree. Yesterday's action was a little bit alarming in the sense that either they didn't believe the gold price was going to keep the gains that it had, or people were cashing in on some of the only sector that was in the green to deal with margin, to deal with their margin calls in other sectors that were selling off so bad. So it's hard to know if it was selling where it was profit taking to deal with the chaos in other sectors, or if it was just a not believing the gold price was going to stick around. But anyway, you slice it, $3,400 gold, $3,500 gold. Even if we go back to $3,300 gold, we are way above where people were expecting it to be. And in honesty, all year long and all of last year, people have been expecting gold to take a break. They were saying it was overbought and needed to take a break at 3,000. And when here we are, several $100s higher, we're going to have earnings reports start kicking in the next week or so. And over the next few weeks, we're going to get a lot of the production out of the majors, out of the mid tiers, out of the small producers, what they made as far as margins. And the average gold price in Q1 was around $2,900, maybe a little north of
I think
that.
it was 2850.
Yeah. So if you, well, I saw one that said 2910 just the other day. So let's just say 2850 to 2900. Think about where we are in the second quarter here. We're substantially higher. If this sustains, we've got a trend of quarter after quarter of higher margins. Do you think that these earnings reports we're about to get are going to fall on deaf ears, or will they get people excited considering how well Q2 has gone so far?
Yeah, it's funny. We were remarking before we started talking here officially. We were talking off mic earlier. Newmont comes out tomorrow after the market closes. They'll be kicking off earnings season, and they're basically the bellwether. And not only has the gold price risen so much in Q1, as you said, between 2850 and averaging between 2850 and 2900, but the oil price has also been trending lower and took a spike down. I mean, if you take a look at a company like Newmont, where they've got these huge open pit operations, 50% of their cost is diesel. So I expect they'll have a fantastic quarter again announced tomorrow after the close. But yeah, I mean, how much of that is priced in, right? We don't know. Unfortunate that it looks like that earnings season is kicking off right when we're having an interim peak in the gold price and possibly in the miners. So it's going to be interesting how it plays out. But I mean, if you look at the big picture, the miners still have a lot of catching up to do. I mean, even with the gold price here, $3,400 an ounce, GDX is still 15-20% away from its all-time high that it reached in 2011 when gold was trading at $1,900 an ounce.
Yeah, also funny to see that Newmont going right up to the level it was at in October of last year, right before that big drop that it saw. I
Yep.
think that was on the back of earnings, wasn't it? So who
Yes, it
knows
was.
what could come at this time. But Dave, this is the balance, isn't it? Is that I think investors are taking note of what's going on in the gold market. Look at what's happening to the gold price, right? It just keeps moving higher. Some of the recent surveys that I've seen out there is that fund managers are saying gold is one of the most overcrowded trades that they're seeing, but they're not talking about gold stocks. So where's the disconnect here? Are investors just truly shunning gold stocks and quite frankly just focusing on gold because it is that safety for their portfolio? And what's the disconnect here? How can the gold trade be so overcrowded but clearly not the gold stocks?
Yeah, well, it's interesting. I've seen that. I think that basically you've already starting to see some sector rotation, but not a huge amount. Because initially, when you have this market drawdown that we've seen in the stock market, and gold outperforming everything, you see investors, they're going to go to cash. They're going to pay margin, they're going to pay off margin calls, and they're going to go to cash, and they're going to be in wait and see mode. Some of them have already started to get into gold stocks, I expect, but not in mass, not on a huge scale. So, I mean, I hearken this back to what my mindset was as a generalist investor back in the early 2000s. And, I was really hurt by the dot-com crash, right? I mean, I had just gotten into it. I got in late and I just watched half my money evaporate. So I just said to myself, look, I got to start looking for things that are going up while I have all this cash. And I stumbled upon the mining sector and I started to nibble a little bit. I didn't go whole hog in. I started to nibble a little bit because I was still nervous about what was going on in the stock market. And I think I think you have the mindset right now. These people are scared because the volatility is off the charts. It's the Dow is up 1,000 points one day and it's down 1,500 points the next day. So I think a lot of investors are sitting in cash right now and waiting They're searching for other safe sectors to be in while everything's going down, like I was doing back in the early 2000s. I think it's the same type of situation because we had an AI bubble, we had a crypto bubble, and people made lots of money. And especially AI now. If you look at the MAGS ETF, it's down as much as gold is up already in 2025. I mean, gold's up 27. Gold went up 27% in 2024, and it's already up another 27% in less than 4 months here in 2025. And the AI sector, based on MAGS ETF, is down 27%. So, they're going to start saying, okay, look, we need to get into something a lot safer here. This move is probably over. This bubble is probably popped. So we need to start rotating into something safer.
I think that's a great observation, Dave, because people don't look to gold and the gold stocks during rosy times in the stock markets. They look to it during fear. I mean, I got interested in the sector during the 2008 great financial crisis because I was looking for safety. So maybe the volatility in the general markets is going to spook some people out where they start looking for safe havens. And it's hard to ignore gold standing out as really the only thing green on the screen most days over the last several months, really. And so when you look at the rotation into the gold sector, the stocks, it takes a little longer. People start with the metal first, and then they start saying, hey, what about the companies that produce gold? And that ties into the earnings we talked about. But the other thing that can get generalist attention is M&A activity. And we did get back to our mining merger Mondays, Dave. We've got another deal to talk about. The Lumina Gold is being taken over by a Singapore firm, CMOC. At least we're seeing another transaction. Why are we not seeing dozens of transactions, though? What's your take on M&A right now in this current backdrop of a high metals price, high margins? Why is there not more M&A?
Yeah, that's a great question. This is a really early one, right? I mean, what they're taking over is, I think, Cangrejos is the largest undeveloped gold project in Ecuador, and it was on my watch list. I have a JMJ watch list of 20 companies. I'm invested in 20 companies, and I have another 20 companies on a watch list that I expect to invest in maybe eventually when I rotate out of something else. I've already had a couple of subscribers send me thank you emails because a lot of my subscribers they know that I've vetted these companies and eventually that I possibly like to get into them. So some of them jump the gun and get into them themselves, and they've been very happy because this is a takeover we like. It's an earlier stage takeover. Everybody made money. I think the stock popped to all-time highs or close to it, and it looks like I said, it's an earlier deal. This is in an earlier stage. We've been seeing companies that are in later stages or in production that are being taken over. We haven't seen very many of these large projects that are in the earlier stage being taken over at a nice premium. So that's very good to see. And also we saw John Paulson, with that billionaire that is behind Nova Gold and also Perpetua Resources, big gold proponent, got a big position in gold. He's taken over the rest of the Donlin Gold project from Barrick. So I wouldn't be surprised to see more deals here, next week and in the weeks ahead.
Hey, we also saw Triple Flag buying Orogen too for Canadian a little over $420 million. So there's still a lot of M&A happening. Quick question on this Lumina Gold transaction. The acquirer, it's a Chinese firm, CMOC Group, the world's largest producer of cobalt. Doesn't it just speak to the market, though, Dave, where we're not seeing the North American or Western world large miners move into some of these companies? It seems like some of the deals that we have been seeing that do offer some of the biggest premium, they're coming from Asian companies. Who knows what legal issues or government issues there might be here, but any thoughts on this acquiring company, the CMOC Group?
Yeah, that's interesting because they can't acquire things in Canada anymore, right? They've been basically blocked from buying these Canadian companies, so they have to go outside Canada for these projects. So yeah, I mean it's really interesting to see that. And also when that happens, it has to be an all cash deal, right? They can't do it in shares.
Dave, one more question for you because you gave us a data point off mic, and I want to make sure we fit it in here. And that's just to put the size of the gold mining sector into context, into people's minds. We've essentially, I won't steal your thunder on the numbers, but we've essentially gone from the size of Home Depot as a sector to somewhere in between the size of Costco and Walmart. So break down the size of the gold mining sector for us.
Yeah, because I mean, I think I did a few interviews with you and some other people in giving people some context and how ridiculously cheap and small the precious metals mining sector is. At the end of last year, the entire market cap of the precious metals mining sector was about $350 billion, which at the time was about the market cap of Home Depot. That's Home Depot is still around that market cap, maybe a little lower now after this correction. But since the move in mining space since the beginning of the year, the total market cap of the mining space now is 600 billion. It's almost double, but it's still relatively small in relation to the market, to the stock market, right? I mean, it's like still less than 1%. So, I mean, there's still a lot of room for people to get in, but it is getting bigger.
Yeah, that's a very good point. There is money coming into this sector. I know not so much into all of the juniors, but some juniors are doing well. But investors are taking notice here. The sector has got some momentum, it's got some steam, some wind behind its back, whatever term you want to use. People are taking notice. And yes, it's never going to be the largest sector in the world. It's not even going to come close to the largest sector in the world. But hey, a little bit more money coming into the resource sector. I know we're all pretty encouraged by that, and who knows how long it's going to last. But right now, the sector does still have a lot of momentum, even with the pullback today. Dave, it's always great chatting with you. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Click that link in the show notes to visit Dave's website. Have a great rest of your week, Dave.
You too, guys. Thanks again.